Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so in this video, I'm going to be going over the chart as well as some other data and all the levels that I have drawn up right here. Looks a little bit overwhelming. I will be going through it, but I did also go over those levels in my last AMC video, which came out on September 20th. I'll link that in the description of this video if you do want a further breakdown of what I am seeing in the chart. And then also I did go over AMC on Friday, October 3rd, in the after hours update. So what I'm trying to do moving forward is doing about a 30-minute live stream every day of the week, whether it's after hours or during market hours, depending on my work schedule. And I'll be going over tickers that stand out to me. Lately, AMC has been one of those. So if you do want a follow-up on this, make sure you tune into those, whether it's in the post on X or in the description of the video. I will try to highlight the tickers that I do cover or that are requested. And so you can join those live, put in a request, or you can watch them after the fact to see what people are thinking about. And like I said, I will be going over some options data like max pain and the net call and put premium. But really, I did just want to dive into the chart. But before I get into all these levels, I actually wanted to remove them just so we can get a cleaner perspective, because not only did we just get a daily close, on Friday, but that was a weekly close, and we did just recently end the month of September. So I think there's a lot for us to go over here. And so one thing you might notice with all of my drawings removed there is that price is above this blue line, which is the 50-day simple moving average, or SMA. And that is currently at a price of $2.90. We have seen multiple closes above that level. We've seen some attempts over here, again, kind of failed attempts here, but now it definitely seems like we have moved above that level. We also got a failed attempt to get above it here in August, and kind of a short-lived breakout here and a little bit longer-lived breakout here going back into May. I'll come back to May in a second. I did go over that in the live stream, though, from Friday, so you can check that out in more detail there. But really just looking at the closes here, so the daily closes, if we look at the close from Thursday, so October 2nd. I always want to say August. Crazy how time flies. But yeah, October 2nd, we got a close at $3.15, having gone up 6.78% on the day. So just a really nice move there, and that was actually a gap up from the previous day's close. We did wick down to fill that gap, hitting a low of 293, and then again closing at 315. So that looks really good. And one thing that was pointed out to me during the live stream is, while this was a very nice close above that 50-day SMA, we also got a close above the 200 SMA, and so I actually have to adjust that here because I don't pay for TradingView, which I need to do when Black Friday comes around. But if I do adjust that to the 200 date, we did get a close above that moving average on Thursday. However, for Friday, we did get rejected from it. We did pull back, closing at 306. And also, one thing to note, I will go over this in more detail in a minute, but with this attempted, break above the 200 SMA, we didn't really see that much volume behind it. So that kind of stands out to me. And this is, again, something that I went over in the live stream, but I might just pull this up here looking at the hourly. I'm going to fast forward to the current time. The thing that stands out to me about this, as this being kind of like a false breakout, and also thinking about this psychologically, how market makers, want to take advantage of retail, chasing moves, chasing, fake out breaks, and then rugging them into Friday. And so I see that as what's happened here, looking at the 1 hour time frame. So if we look at Thursday here, it's between the shading here where it's black between the orange and blue. I don't know how well you guys can see that, but we didn't really see that much volume again on the hourly time frame here until the last hour of trading for the day. And we actually saw the majority of the volume for that day in that last hour. And so we saw a pump into the close. And, then in after hours trading, overnight trading, and pre-market, there's lower volume, lighter volume, as you can see here. And retail is probably thinking, hey, we rallied up above the 200 SMA right before close. Let's get a higher close well above max pain on Friday. Buy, 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 buy. But I think what probably happened, thinking about this more from a psychological perspective, is that big money market makers, whatever, wanted to pump this up because they wanted to give retail some hopium that AMC would continue running. They'd be buying it here as those market makers, hedge funds, whatever, nefarious players, selling up here into retail before then rugging it down to around max pain at the close on Friday, thinking that, it's squeezing here, it's going to be taking off. But no, actually, that's just kind of like manipulating retail into, holding the bag as it returns down to max pain. Max pain, I think, is going to be a very important level that we'll be seeing a lot of in the coming months. So I'll come back to that. But generally, I think that this just looks like, retail kind of got played here between Thursday and Friday. But that doesn't mean I don't think that things are looking good. And so coming back to the daily, I should note before I do that, this spike in volume, I think that's actually the highest. I'm going to take a step back. The highest volume that we've seen since May. I said May would, be important. And so let's see, this is August, a little spike there up to the 200-day moving average. And that's lower than the volume that we saw Thursday right before close. And so actually this spike over here, we did have higher volume, and that was at the end of May. So I think that's pretty interesting because if we look at this on the daily, and let's see, I just got to come in over here. And, the volume that we saw on the daily, it really doesn't stand out like it does over here. Oh, this is actually May of 2024. So let's zoom in here. Sorry about that. But again, the volume that we saw Thursday, Friday doesn't compare to what we saw in May. Much higher, a failed attempt to break out, and then this massive pullback. So, I think that we're kind of gearing up to actually get like a legitimate breakout above this 200-day moving average, but we're not there yet. I do think that we're going to see a little bit of a pullback. We just don't have the volume backing this move. And I think that this is kind of like a, final test to see, can we break above this? No. Lots of volume. Okay, can we break above this now? No, less volume. Okay, can we break above it now? No, again, less volume. But I think that we're, getting to a head, the tip of the wedge here. And I think that we are going to be seeing, once we see, an increase in volume, we'll be able to launch above the 200-day SMA and see that as support. But let's see, I'm just going to, not remove that. I'm going to adjust this back to the 50-day SMA. And we can see that, looks good. We've got above that. So that is definitely some progress. Although, in the past, we have gotten above it and we've gotten pushed back below it. Hopefully this time is different. Hopefully we can hold $2.90 as support. But since I mentioned the weekly and the monthly, let's look at that, and then I'll go into the drawings and then some of the options data. So looking at the weekly, let's see here. We did get, a weekly close above the 50 SMA. And if we look over here, let's see, 50 SMA, 290 over here for the week, a couple weeks ago. So not last week, the week before, the week prior to that. So I guess 3 weeks ago, we saw a close at a price of 301. And that is, around the time that I put out that video over here, thinking that I feel like AMC just flipped bullish. And so we get this close above, I believe, close above that 50-day SMA. It's fixed to days, so even though I'm looking at the weekly, it's still the 50-day SMA. And so over here, we closed at 301. What was the 50 SMA? 298. So we got to close above it there. Then we get a little bit of a pullback the following week, a little spinning top there, and then a move higher. And so this actually kind of makes me think that this is somewhat of a, like a rising three methods type of pattern. And I can actually just pull that up real quick. You guys can look into this more if you like. I'm just typing in rising three methods up here, searching. And I like to go to Investopedia. And, from this, really, we just got this image here. This is a continuation pattern. And I'm just going to close that. So I'm seeing some upside moves, big, green candle followed by 3 red inside bars, and then another continuation, an engulfing candle, getting back like above the highs here. And so that suggests that this will be continuing to the upside. Again, you can read about this more on Investopedia. But then coming back to the chart here, this is not, three methods or anything, but we do have this on the weekly. Very big green candle going up 7.12% for that week. Then we see a red inside bar spinning top here, closing below that 50-day SMA. And, that came down about 4%. But then we get another big green candle, bigger volume on that as well. Big volume on these green days. And that went up 5.88% over last week. Getting in a higher close, but not closing above the high here. I'll talk about some of those levels, but I guess this high for that week was at $3.08. So it would have been nice if we closed above 308. That would suggest a little bit more strength or like a confirmation closing above that level. We did close, like I said, at 306. But yeah, thinking about that on the weekly, I think that this is looking, pretty good, that we're closing multiple weeks, not in a row, but 2 weeks here, closing above the 50 SMA, and maybe we start to maintain above that, hopefully longer than we saw over here, which was just, really like a couple months, a month and a half or so above before coming back below. So, hopefully this is really, the start of the change in that. And then if I do look at the monthly here, this one, let's see. Let's think about this before we get too excited. This candle right here, that's October. October just started, so we're not seeing a close above that 50-day SMA just yet. Last month, September, we closed at a price on September 30th. We closed at a price of $2.90. And let's see, for that, month, not Max Payne, the 50-day SMA was a little bit higher than that. So we did close below it there. We did get, a couple closes above over here for the monthly, but then we pulled back down. But yeah, this just seems like, we're kind of riding that. I think eventually we are going to be breaking out. I think that things are looking good longer term. This is the monthly, so take it with a grain of salt. Nothing happening overnight in my view. But yeah, I think that this is looking pretty good. But anyways, I'm going to come back to the daily. Probably too much of a ramble there. Hopefully you guys find that helpful, find that useful. But coming back over to here, I did just want to point out before I throw up the drawings, if we look at the candle here, this red candle for September 30th, it's all a psychological game. The market is all a psychological game. That's how I view it. You got market makers, nefarious actors, whatever. They're trying to get you to lose confidence. So you sell when you should be a little bit more, confident about things. And so here on September 30th, this makes me think of, it's a mind game. On September 29th, we get above that 50-day SMA, close above it. On that day, the SMA was at $2.94. We closed at $3. But that quarter is not over yet. That quarter ended on September 30th. The third quarter of the year. We are now in the fourth quarter. It is now October. And what we can see is that on September 30th, we closed at $2.90. And on that day, the SMA, the 50-day, was at 293. So we closed just below it. And so that makes me think, hey, if retail's looking at this on a quarterly basis or, whatever it is, let's, make this not look so good in that way to kind of shake people out. But this might actually just be breaking out above that level now. Maybe we get a retest, which I'll talk about. And I think that will be a dip buying opportunity before this continues to go higher, because I believe I'm going to make the title of this video higher lows, something along those lines. But yeah, enough rambling about that. Let's get into the drawings here. There are a lot of them. One thing that I'm going to do that, I highlighted in the last video, again, this one over here, is this box here talking about AMC trading below 3 for what seems like the majority of 2025. I'm going to delete that box. I don't think it's really that useful. Let's see, this yellow line here, I talked about that. Again, I'm not going to get into it in this one. I talked about it in this video. I'd encourage you to check that out. Makes me think that yellow line has acted as some support over here, some pretty notable support, and that I think that we're respecting it. We have been putting in higher lows over here. We did get a little bit of a fake out breakdown here, but in that last video, which came out again on September 20th, so let's see, that would have been after this Friday, September 19th, when we went up on the day 5.99% and closed above that 50 SMA. I put out that video over the weekend. Again, also to look at that volume there. We didn't see that big of volume right here. So that makes me think we're going to be seeing a pullback. And I think that's a dip buying opportunity. If we do see it, I suspect we will. But over here, I put out that video. I drew this trend line, and we did kind of get a fake out break below that trend line. But in that video, I talked about really based on this Fibonacci retracement. And let's see, I'm actually going to make sure it's not locked up here. I'm going to lock it. I'm going to make sure it's pinpointed to the exact highs and lows, just so there's no fumbling around with what those numbers are. So over here, the low on September 4th was, let's see, 267. Got that right here. And then the high from over here, September 19th, was 308. So those levels are perfect. So that's good. Locked into place, that's fine. And what we can see from this, what I talked about in that video, is that I could see the stock price coming down to around either the 50%, which is this green line here, the 50% Fibonacci retracement, or the 618, which is a 61.8% retracement, Fibonacci retracement, the yellow line there. And those range from 288 to 283. And so I said in that video, I could see the stock price pulling down to between 290 and 280. Ballpark, not exactly. And what happened is we hit a low on Friday, September 26th of guess what price? 280. So I nailed it with that. I actually had a limit buy order at 280, but because we just, dipped down there, the order wasn't filled. It's kind of disappointing, but it is what it is. And, we bounced. So, I think that was spot on. And like I said, I think that we're going to be seeing another pullback. One thing you might notice too is I have this trend line over here. Let's see, where does that go to? That goes from the low, April 4th. That was at a price of 245. This is a trend line, so it's not a ray that's pinpointed to the exact levels. And actually, maybe I want to do that. Maybe I'll do that here. It's going to extend forever into the future, which is maybe a little bit awkward. But let's do that to see, actually, is that really that important? Yeah, let's do it. Let's do it. So I'm going to delete this line because it's just, approximate pivot point here and then approximate pivot point over there. It's not exact. And so what I'm going to do is I'm just going to zoom in here. And so we can see what I view as these two important pivot lows and I will draw the line based on that. So going up here to the ray tool, get the 2 pivot points. And so here the low was 245 on April 4th. The cursor's at 246. So let's just line that up right there, 245. And then over here on April 30th, the low was 253. And let's see, right there. Okay, and so I'm just going to make sure that those levels are right. 245 over here. Perfect. 253, is that what I said? Perfect. So those are all good. I'm just going to lock it in place so it doesn't move. And let's see. Yeah, I'll leave it as a white line. It was white before. And we can see we kind of, bounced from there. We nearly got to it over here, hitting the low on July 1st, which was at $2.79. I drew a green line there. I thought that was going to be important. We tested it over here. We fake out broke below it over here. And not to get distracted by that green line, but we got a fake out break below that white uptrend that I just drew, consolidated around it here, pulled it down below it to that yellow trend line, which I again went over in that last video, moved up here, got rejected from that uptrend also with this downtrend here. And now, hey, maybe we're starting to hold above that trend line. I don't know. To be honest, I'd be a little speculative of that because it's been kind of wonky. It's, kind of approximate. Maybe actually if I do switch this over to the log scale, maybe it looks a little bit better. It looks like we got rejected from it, in all honesty. So, yeah, so I'd take that with a grain of salt. But it's not surprising that we saw a red day on a Friday, that we did see a pullback coming to around 3. And so I wouldn't worry too much about that. Also in that last video, I think, this video over here I keep referring back to, I had drawn this downtrend. It looked like we were potentially breaking out from it because I think I had it, drawn like that. So it looked like we were potentially breaking out. But then if I adjusted it to the highs here, and, maybe I want to do what I did with that uptrend. Let's pinpoint this. Maybe these are going to be important levels that we want to keep our eyes on. So just go into the high from May 27th. That was at 408. So just going to line that up right there. And then go to the high over here from July 21st. And that was at a price of 360. So just move that up 1 penny right there. Lock that into place. And we can see it from there. Yeah, we did kind of get rejected from that. Right when I put out that video about AMC flipping bullish, I did kind of highlight, that it might be resistance. I kind of edited that into the video. Pulled back here to 280, as I talked about. Now bouncing up, kind of getting rejected from that uptrend here. Pulling back from this very casual uptrend here. I think that we're going to be pulling back. Where could I see us pulling back to? And so I'm actually going to do that. I'm going to be a little bit lazy with it, in all honesty. I'm just going to adjust this Fibonacci retracement. So I'm actually just going to extend it sometime into the future. So let's say 300 right here. I'm going to make that 305. Just going a little bit forward into the future. And then I'm just going to adjust the high. So over here, the high was 308, hit again on September 19th on that Friday. But the high from Friday, October 3rd, now that we're seeing that little bit of a rejection, that high was at 318. So I'm just going to change this 308 to 318, and we can start to look at some of those fib retracement levels. I could add the 236 up there, but I think that it's probably going to be pulling back down lower than that, so I'm not even going to bother with it. And so what we can see here is this blue line that corresponds with a 382 or the 38.2% Fibonacci retracement, and that is at $2.99. Kind of makes sense, around $3, that being a psychological level. I think most definitely we could be pulling back to that. And I think we're actually going to go below $3. So I think that we're definitely coming down to the 382. I'll go over that in a minute. It's really just based on Max Payne. But then we look at the next level down, the green line. That is the 50% retracement at 293. Okay, considering that. And then we have the 618, the 61.8% retracement, and that is at $2.86. And so, with that being said, I think that we're going to be pulling back to between the 50% and the 618. If we look at that 50-day simple moving average, that blue line right there, we can see the number over here. That is at $2.90. So what I think is going to happen with AMC is that from this close, we're going to come down, maybe go a little bit lower than 290, but I don't think that we're going to get to 280. Pull back, retest that as support, and then we start to move up and find this to hold that level as support. And then what we need to be doing is getting a close, not just a wick above, but we need to be getting closes above prior highs. That's going to suggest a change in momentum, a change in strength, that, AMC's got its footing and now it's going to be going higher. And so I believe I had talked about the high over here. That was 308. We got a close on Friday, October 3rd at 306. We didn't get a close for the weekly above that level, but we did get a close on the daily on Thursday, October 2nd above that, with that close at 315. So in my view, that strikes me as significance that this is potentially, a confirmation that we're starting to break trend. But then Friday, we get rug pulled a little bit. That's what happens. We're all pretty familiar with that. Pumping this up to get retail on board in overnight trading and then rug them into the max pain on Friday. And so with that, I see us pulling back down to here. Why do I have this line here highlighted at 326? So that's actually the high from over here, August 11th, high of 326. So what we need to be seeing, now that we got this daily close above 308, that was the high, we need to see, start to see weekly close above 308. We haven't seen that yet. We need to start to see daily closes above that, see more of them into the weekly. And then we need to see, at least a daily close above 326. That suggests that we are starting to move higher. And the reason why I don't have this drawing, this doodle coming down to the 786 here, which is the 78.6% retracement, that's at 278. I don't see us coming down to that unless, maybe it's a sweep of the lows, something like that. Maybe people have stop losses here at 208. And if we go down to 278, then they get stopped out and then it can move higher. That would be like a spring. So I could see that happening, but I don't see that happening because we've been putting in higher lows. Even this break below that trend line, the low over here on September 17th was at 280. Over here, it was 280, so we didn't put in a lower low. Maybe we swept some lows there that had stop losses a little bit higher. But generally we're putting in higher lows. So I think that's good, and I don't want to see us break that. But if we do get a violent move down to 278 and then start to see closes above, that was probably spring or, sweeping the lows before it goes higher. So I don't necessarily think that would be bad, but I don't expect it. Like I have doodled here, coming down to around 290 and then start to move higher. So that's what I could see. And this is something that I drew in the stream. Oh, actually, I'll zoom out and do that in a second. I should mention this green line here I had talked about before, 279. I had done a video about that, thinking that, we don't want to see lower closes. And then over here on August 6th, we did get a close below at 278. I remember that I put out a video following that. And, that struck me as an important level. We did start to get multiple closes below it over here. But, I kind of view that as like the spring. And so that's part of the reason why I don't see us returning to 278, because we already saw a sweep of the lows over here, not only with this one close below, but with, multiple closes below over here. So I don't really see that as happening, but I do see that 280, 278 in that range, that being a pretty important level to be paying attention to. Clearly, we got two lows over here at 280, so good to be paying attention to that. But what I wanted to say as I was zooming out in this, sorry for my scatter brain, but I'm actually going to make sure that you guys can see it. I'm not hiding it. Ed's not hiding it. I noticed this during the stream, I believe, that we see lower highs in the RSI. Also, general trend, I mean, we do see a little bit of a breakout here, but the general trend is lower highs in the volume. Also, lower highs in the stock price. All right. But now what we're starting to see, again, a little bit of an outlier here, but now we're starting to see higher highs in the RSI and higher highs, or at least a change in trend. Generally, if you like squint, if you average this, the trend is that volume's getting lower over here. Now, excluding this outlier, the general trend seems to be that volume's increasing. Also with that, price is starting to get to higher highs, while not necessarily closing so notably above these, prior highs that we need to be getting above. I think that will be happening. But generally, the trend is we're seeing volume gradually start to increase. But, that's also around, the end of a quarter, the beginning of a new quarter. And, so I think that there's a lot kind of going on behind the scenes with that. The retail probably doesn't pay too much attention to, but I think that this could be things starting to shift, that we're getting shaken out, and we don't want that to be happening. We see, again, increasing higher highs, RSI, volume trending higher, starting to put in higher highs in the stock price. Once we start to get some more notable closes, again, above, like a weekly close above 308, a weekly close or daily closes above 326, I think that's looking really good. But if we do pull back, and I suspect we will, mark my words, we're coming back to 290. I think it's for sure happening. And maybe I'm wrong, and that's a good thing if I'm wrong about that, because then that means price is going up. But we come down to 290, test that 50 SMA, which is going to change every day because it's a daily moving average. We come back to test that, come back to, almost the 618. Oh, there's another thing I want to talk about with this. There's just so much, and this is, I think, really just getting into like the psychology of the stock market, and it's like, how can they dupe us? And so what I want to do with this is, and this is also kind of on the theme of higher highs, so I'm just going to adjust this back to 308. So it's like taking the high from over here. And so where do we pull back to on that retracement? Did we come back to the 786, that red line there at 276? No, we did not. But we did pull back to the 618 at 283. Orders would have been filled had they been placed at that level. I, with my analysis, said 290 to 280, and trying to be more disciplined, I decided, well, I'm just going to place a limit buy order. Not a huge position, so I can reevaluate, but, I'm just going to limit buy at 280. That didn't get filled. Okay. But we did pull back to that 618. That was marked up here, and that's at 283. So let's keep that in mind. My order would have been filled at the 618, but was not at the level that I had talked about. And so with that, let's just, extend that forward on a retracement. This is going to come back to the 618. So let's think about that. And let's, readjust this back to, just so you see, I just did the undo, but it's back at 318 there. And so that 618, as I have doodled to, that is at a price of 286. So do I think price is going to come to 286 as it had come back to that yellow 618 in the past? No, because of higher lows. And so we look at this, we see a trend, and I say, oh, well, it came back to the 618 before. I would have gotten a fill. I didn't at my lower level that I saw there. Okay, so now I'm going to load the boat, hypothetically, at that 618. I'm going to place a limit buy order for all the shares in the world, again, hypothetically, at 286. Is that going to get filled? I see that price, maybe coming down to exactly 286, like it came down to 280 and I don't get a fill. Or maybe it comes down to 287 and I clearly don't get a fill there. And so I think with this, what we're going to see is a retest, like I said, at 290, but I don't think we're going to go much lower than that. I think that we could be getting left behind if we see these fib levels and don't recognize that if we're putting in higher lows with the lows over here in the stock price, we might also be putting higher lows as far as the retracements go. And then we really start to curve up and, maybe start to go parabolic. Who knows? I'm not trying to suggest anything. I have no idea. I just think that the chart is starting to look better and better, especially if we start to do this doodle that I have played out here. So yeah, I don't think that price is going to come down to 286. I think that if it does, that might be an opportunity. I'll follow up if it comes down to 286 with a video, not just in a stream, but in a video. And but for me, what I've done, I actually did have a cash secured put order placed, a sell order placed, that due to GameStop stuff that got canceled and whatever. So I might replace that. I might not. I, to be honest, haven't thought about it too much. Maybe I'll talk about tonight during Taker Request Live, so make sure you join for that. But let's see, what am I thinking? Oh yeah, so I the cash secured put, not doing that, but I had an order for 10 shares at 280. Again, not a huge position, but it gives me some flexibility to reevaluate, whatever, if it does get filled. I adjusted that to 290 because if I think I leave that order at 280, I think that's going to be me being stubborn. That's going to be me getting left behind. And I don't think that's a good idea. And what I think is a good idea is that we come back to retest this 50-day SMA. And that's going to change every day as price is above. It's probably going to be ticking a little bit higher. I'm not sure that I'm going to do this, but maybe I will. Like I said, I'm not sure, but I have a limit buy order for just those 10 shares at 290. Because I think that's what we're going to be pulling back to. And I think that the general trend is that, we're at the bottom of this painful thing that we've been in since, May of 2024, going back even further than that, super painful. And this is something I did go over in that last video, so make sure you check that out. But this is on the log scale. I think that AMC could be heading up to $10. Maybe not in 2025, maybe though. We are in October, Moonvember, and Bullcember up ahead of us, or, Santa Claus rally, whatever. But yeah, I think that things could be really setting up for AMC to start going higher, like to $10 a share. If that doesn't happen in 2025, which it may not, I think that we could be seeing that in first quarter of 2026. But yeah, I'm not going to ramble on too much more about that. I'm just going to adjust this back to the linear so you can see things look pretty different looking at it like that. But just to kind of bring my ramble to a little bit of a close, I did just want to mention Max Payne for the foreseeable future for pretty much every single strike. Max Payne is $3 getting into January. So the monthly contracts in January expiring on the 16th, 2026, $3. But then in March for the monthlies there, we see it comes down to $2. And so what I see with this is that price is probably going to hang out around $3. Again, I think that we're going to be getting, and maybe I'll just zoom in on this so you can see a little bit clearer what I'm talking about. Hopefully it's a little bit easier for you to see. $3 all the way down, but then March, $2. That's kind of odd. What I see is price hanging out around $3 for a little while, boring us. It's going to bore us out of our minds. We're going to see other things running. This is going to be boring around 3. But as we, dip down to 290, take advantage of some opportunities, evaluate that volume. Is that volume starting to pick up as we start to break out, closing above 308 and 318 is the new high that we just saw on Thursday, and then 326 was that prior high marked by the yellow line over here. That was the high from August 11th. Are we starting to see volume tick up on those upside moves? And as we do go down to like 290, is it not really a volume? There's not a lot of sell pressure. And so I think that eventually we're going to get a move up to like 350 or higher. And Max Payne's still going to be around 3, and that's going to trigger what will lead into a gamma ramp or a gamma squeeze. How high is price going to go with that? I don't know, maybe $6, something like that. And then it moves up. And then as everybody's euphoric, then it starts to pull back, calm down, whatnot. So do I think it's going to be a straight line to 10? No, I think that we could get a move up to 6. And also, I'll talk about that. Why did I say 6? Is it because it's a 2x from 3? No, it's actually because looking at some of the contracts over here, let's see, I think I actually just want to pull up the options table. So these are some of the contracts that I do look at. I was considering selling some cash secured puts here. I didn't. But looking at, let's see, I need to pull up the options table that's in Webull. And so I'm going to pull that up here. Sorry, I got crypto stuff over here. But let's look at my stonks list, AMC. And this is going to be pretty small. I apologize for that. I wish I could. Actually, I can take a screenshot and zoom in on it. But what do we see for October 10th, this coming Friday? The highest strike is $6. Okay, note that. What do we see the highest strike for October 17th? $6. And these are, I should note, calls. Let's go down to October 24th. What's the highest strike? $6. Okay? Again, are we seeing a pattern here? Highest strike, $6. October 31st, Halloween. What's the highest strike? $6. And I think that's going to also be important to remember. November 7th, $6. Are we seeing a pattern here? November 14th, $6. I'm going to keep doing this because I think it's really important. We need to drill this in our heads. November 21st, this is, I believe, going to be the monthly. And yep, that's the monthly. It's actually $5.50 is the highest strike, but so still right around $6. December 19th. This is where we first start to see it above $6. This is going to be the monthly contract for December. It's $8. And so I think it's really important for us to be noting these strikes, because if we notice that they're virtually all $6, and then we start to see, oh, wait, actually, for the November strikes, they're actually $8 now. Or for some of the October strikes, the highest ones, they're actually $8 now. That would be suggesting, in my view, that market makers are adding higher strikes. So retail, like you and me, FOMOs into those higher strike calls, saying, hey, this is going to squeeze higher. I'm going to YOLO in on those $8 or $10 calls, whatever. But that actually, what that does is it dilutes any pressure from contracts that could trigger a gamma squeeze. We start to close above max pain, strikes above max pain. That's going to send price higher. If we start to YOLO on super deep out of the money calls, far out of the money, and price doesn't close above there, then those contracts go to zero. And that ends up, market makers make money on that premium, and those contracts go to zero. And that's not good for retail. So I think it's good to note max pains, the highest ones for the next couple months, $6. We see those go higher. That's a red flag. We see them stay at $6, and maybe AMC starts to move. Maybe getting above the high here around 4, then at that point, we could be potentially seeing a retest of this downtrend. And that could be, if price is getting up to 4, look at those strikes on the options data. I'm not saying that options are good investments or anything like that. You do you, but options are data, and that's leverage data, which can send stock prices volatile, whether that's to the upside or the downside. So very important to be paying attention to that. So if we start to see a move up to 4, let's take a look at the highest strikes, because I think that those could be suppressing the price down. But ultimately, I think with all of those max pains at $3, I think that we're going to start to see a break up and a breakout, and we're going to start to see this move again, potentially to around $10, either third quarter or fourth quarter 2025 or first quarter 2026. I think that is feasible. And then just to kind of end it, because this has been such a long ramble, about 44 minutes now, I'm going to make this 100% so it's not too small there or too compact. But this is the net call and put premium for Friday, October 3rd. You can also see the dates over here. This is for AMC Entertainment. And so this Premium data, really, in all honesty, it doesn't stand out to me. I don't think that we're going to be seeing a big move soon, maybe in the coming weeks. But right now, this doesn't look primed for, or there's no signal in my view that this is going to be going higher. And so what we see here, I don't know how familiar you guys are with this stuff. I don't know if I try to save this for the end of the video because I don't think people really care for it. Let me know in the comments if you do enjoy my analysis of the net call and put premium. But what we can see, this is just for Friday. Yellow is the stock price. It's kind of hovering here and then it goes down a little bit. Again, max pain, pulling it down to around $3. We closed above max pain, but it's not strikes above. That's where we would get the gamma ramp or squeeze type of action. Closing 6 cents above, that's great, but it's not signaling that, hey, we're going to be rocketing higher. Not just yet. What we see in the red, what we see in the red is the net put premium. That looks more or less flat. We see it increase by about $48,000. In my view, net call or put premium changing less than $1 million. It's not really anything to be going on about because, retail, maybe there are tons of retail in AMC. Maybe cumulatively, we put in thousands of dollars, tens, maybe hundreds of thousands of dollars into premium. But we're not moving the market, Whales are what move the market. And so that would be when we start to see net call or put premium changing by millions of dollars. But, we do notice that while that red line looks more or less flat, that the green line, which is the net call premium, actually came down, kind of following the stock price there in yellow. And so we saw a decrease in net call premium of about $128,000. It's not so great that net call premium was coming down, but it's not millions of dollars coming down. So it really doesn't stand out to me as being, that significant. And it could also be, with Friday, people taking profits or closing positions, cutting losses, whatever, before the contracts expire on the Friday. So, that's not really too surprising. No big deal there. If we go back 2 days, so this is just going to include not only Friday right here, but also Thursday here. This, stands out to me. I did mention it in the stream, I believe, that we see the stock price in yellow again going up. Thursday was a great day. We see net put premium again being more or less flat. And so actually, I'll just do it with the cursor, but I can fast forward or rewind the dates here. So we just look at this on the day. But if we look at, where the cursor is at the end of the day on Thursday, net put premium, you can see the number up here, but I have to have the cursor over here. And so that net put premium went up by about $7,000. Again, it's basically flat. It's not that much money, but net call premium went up by $379,000. You can see that green line going up there. That looks good. However, it's not millions of dollars. I want to see millions of dollars in this. And so maybe this is a sign that things are starting to look good, but maybe it's also like retail FOMOing in as this is pumped up at the end of the day before max pain brings the price down on the Friday. So, I don't think that this is necessarily that significant, but it's not a bad look. It looks good, but it doesn't look incredible. It doesn't look great. It doesn't look unusual. If we do go back just to look at all the data here past 30 days, that little blip that we saw here on Thursday, it's a little blip. It's nothing too crazy. But what we do see here over the past 30 days, maybe we see some dips in net put premium. That's pretty good. But this put premium, the red down there on the 11th of September, came down by about $305,000. So that's actually kind of bullish or suggesting that the bottom could be in, but it's not millions of dollars. But we also can notice that with the zero line being right here, that doesn't look as negative as what's up here. That looks more positive. That's net call premium in green there, which on September 19th, so that's when we got that close at 301, I believe. That's when I put out that last video. That again is over here. I'd encourage you to check it out. But coming back to this, on the 19th, that net call premium, what was it above? It was above $1 million, $1.06 million increase in net call premium on that day. We did see a little bit of a pullback in price. That's shaking out weak hands, whatever. That's people losing conviction, whatever. But then, price did go higher. So I think that this is, also look at the volume there. Lots of volume on that. So I think that this is looking good. I think it's looking that we're starting to bottom or have bottomed and that we're starting to flip bullish. I think that AMC is looking great. I think that we're probably going to have some more weeks of shakeouts. I think we're going to have some more Thursdays into Fridays of fake outs and retail holding a bag up there as we pull back on the Friday. But I think if we dip to, let's see, the 50%, 293 down to the 618 at 286, I think that if we dip to that range, I think that's a dip buying opportunity that could be followed by, in the next 6 months, a move to $10 a share. I could very well be wrong about that. I will follow up on this in the next video when we do close above some of these levels, whether it's 226 or if we start to pull back and things are not looking so good, like we're starting to close below 286, 280, or getting down to 278. But yeah, I think that a dip down to 290, I think that might be one of the last opportunities that we get to buy shares below $3 prior to a move up to 10. We've been waiting a really long time for this. I know that we're all fatigued. I know that we're tired of this. I used to do weekly AMC videos, but I don't anymore because I got fatigued. And I think that this is, kind of the moment. The next 6 months, I think that they're looking really good for AMC. I'm excited about them. I hope you guys are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below. Make sure you subscribe to the channel and turn on that notification bell for if and when I do those daily streams, whether after hours or market hours updates. And when I do post on the channel, I might have some screenshots sharing some of my thoughts on AMC. But yeah, anyways, I hope you guys are having a great Sunday. I'll see you tonight for Ticker Request Live, and I'll see you for market hours updates next week. Take care. I'll see you in the next one. Bye, guys.